Hi, and welcome to Mortgage and Financial Solutions. I'm your host, Mark Rigney. On today's program, we're going to give homeowners steps to take when facing a crisis with their home. Whether it be a foreclosure, loan modification, or short sale, homeowners need to know what options and tools that are available to them to prevent the loss of their home. Ingrid Beckles from the Beckles Collective is in our studio again today. Ingrid is going to share her expertise with our viewers to help those in need. Ingrid is the former Senior Vice President with Freddie Mac, and her knowledge could be very valuable for those homeowners desperate for a remedy to their housing situation. Hi Ingrid, thanks for being here. We're excited to have you.
Hi Mark, thanks for having me.
Ingrid, why don't you share with our viewers a little bit about your professional background?
I started in retail banking back in the 80s, before you were born, and I moved into the mortgage audit space in 1983 and developed the quality control audits for Cherry Chase Savings Bank, as a matter of fact, and BFSL Mortgage Company here in the DC area. From there I went to PNC Mortgage in Atlanta, Georgia, did operations executive work and whatnot, and left PNC when we sold ourselves in 2001 as the head of credit policy for the mortgage organization. I went from there to Freddie Mac, and I spent most of my past 8.5 years at Freddie Mac as the Senior Vice President and Head of Default Management for Freddie Mac.
Talk about a resume. That's quite a resume.
I've had fun.
Okay. What are some options available to our viewers to help stave off a foreclosure?
The first thing that you need to do if you're thinking that you're going to get into trouble, or if you're already in trouble, meaning that you're behind on your mortgage, is to call your servicer. It's very important that the homeowners connect with their servicers, because the servicers act as the agents for the people who own your note. A Fannie Mae, a Freddie Mac, the investor, or it could be a Bank of America, or any of the people who buy and sell mortgage instruments in the market. So when you connect with your servicer, you want to tell them what your situation is, and they will offer certain solutions to you. I suggest that everyone become prepared before they make that phone call. There are so many programs available out there for the public. And in some cases, when you can't keep your home, the best option is to take advantage of one of these solutions, which is a short sale. So the borrowers have options such as short sales, modifications, both the government program and the proprietary programs. There are deeds in lieu of foreclosure. There are payment plans that the borrowers can go on if they're having temporary setback situations. So there's quite a bit that is out there and that has been out there for many, many years. The Making Home Affordable program that was developed by Fannie and Freddie for the government, the Obama administration, covers both the refinance side and the modification side, and is relatively new. It was launched in April of 2009. But the banks and Fannie and Freddie and Ginnie Mae have had their proprietary modification programs in existence for the past 10 years or so. So there is help, and you should get yourself prepared to enter that discussion.
So most importantly, they need to be proactive.
Absolutely.
Don't wait for this to come onto them. Attack it, be aggressive,
Right.
Go after it.
That's right. And know your situation. Know what your income is. If you have a reduced amount of income, make sure that you understand what your income stream is and your cash outflows. Do your own scratch sheet budget so that you are informed when you're speaking with the customer service representative at your servicer.
Now you mentioned loan modification. What is it, and is that a permanent solution?
A loan modification is actually a permanent solution. A modification is an actual restructuring of a mortgage note.
Okay.
And those are offered mostly to defaulted borrowers to reduce their monthly payments. Under the Making Home Affordable program, about 800,000 borrowers have benefited from the Making Home Affordable modification program. It's called HAMP, Home Affordable Modification Program. There are about 700 or so thousand who have benefited from the HARP program, which is the Home Affordable Refinance Program. The difference between the two, both are permanent restructurings. One's a refinance and one's a modification. In the refinance transaction, it's restricted to borrowers who are current on their mortgage but have some kind of imminent default, meaning that they know they're going to be in trouble shortly. Maybe they've lost their job recently and they have run through all of their savings.
Right.
The Home Affordable Modification Program was just updated, version 2.0.
How long ago?
In November of 2011. So the announcement
recently.
Just recently. The announcement was released by the FHFA and the GSEs, and the GSEs are the government-sponsored agencies, Fannie Mae and Freddie Mac. in October of 2011. Most of the banks who service Fannie Mae and Freddie Mac performing loans will be able to operationalize that by the first quarter at the latest, and I know they're already taking applications right now. And in the refinance environment, the changes are really good for the borrowers.
Now, this is the changes from the old system
HARP program to the new one
as of November 2011.
That's right.
You heard it here first from Ingrid Beckles. Okay, go ahead.
There are certain requirements. You have to have obtained your mortgage prior to January of 2009.
Okay.
And I think the really good thing about this is twofold. Before, it was designed always to help borrowers who are underwater. The president, when he made his announcement in February of 2010 about the initiation of these programs, wanted to make sure that borrowers didn't feel they had to become defaulted to get help.
Okay.
So this helps the performing loan borrower, rewards them by being able to offer them assistance if they are in imminent default condition.
Or underwater.
And if they're underwater, but they have to also be in imminent default, okay? You can get a regular refinance transaction if you're just, a borrower who's not underwater, let's say, or and you're just looking to refi because the rates are very good right now. But for this situation, it's really for borrowers who are at risk of defaulting, and it's to stave off that default because you don't want to hurt the credit of those kinds of performing loan borrowers. In the new program, the new HARP program, the loan to value, the underwateredness, as it were, of the borrower's home has been lifted, so there's no cap. Before, it was restricted to a maximum of 125% LTV. That means that you have a home that's valued today at $100,000 because of the declines in market value, but your mortgage is at least $125,000.
Couldn't be more. Before
that, it couldn't be more than $125,000. Now, you can. There is no limit to it.
There's no limit. You could be $175,000 under.
You could, or 75% underwater. Right. And that's really good because as the analysts looked at the market and they thought that the bottom, they did their stress tests and all of that, they thought 125 was a good place. And when you release any new program, you want to go back and evaluate the market conditions. And as we've continued to see deterioration in values, that was one of the reasons that not as many people as they'd hoped had taken them up on doing this refinance and getting themselves into an affordable situation so that they could keep their homes. So this is really good. The other portion that I find to be very good about the new program is that you can refinance into a mortgage that is a lesser term. Why is that important? So today, let's say you have a 30-year mortgage, and you got it before 2011, so maybe you've made 5 years worth of payments, and you've lost your job. Before, if you wanted to refinance into a shorter term, like a 20 or 15-year mortgage, it would cost you a fee. The good thing about going into those kinds of mortgages, if you can, is that if you're not too far underwater, there's a likelihood that you could actually rebuild your equity faster and no longer be underwater by taking a shorter term mortgage. Because you're paying off principal faster. And now there's no fee associated with it. So those are big options for borrowers. In some cases, depending on the interest rate of the 15 or the 20-year mortgage, you may see a payment increase, but if your 30-year mortgage was in the 6 or 7% range, you may even see a payment decrease and have the opportunity to rebuild equity faster. So those are two really good features of the new Home Affordable Refinance Program.
Very important for our viewers.
And it is permanent, so that's good.
Okay. Now you briefly mentioned this, and I think it's a very effective tool I'd like you to share with our viewers, a deed in lieu of foreclosure. Explain that, please.
Okay. A deed in lieu of foreclosure is a little tricky. It's effective when it works, but it is a little tricky. A deed in lieu of foreclosure is when the mortgagor has an issue. It's probably in default. It's usually only taken the homeowner, yes. And they turn the deed over to the organization that owns the mortgage.
They just gave it back to the bank, if you will.
The deed and the keys. Now, the tricky part is that you can't have any other liens against the property. No other
second trusts,
no tax liens, no mechanic liens, none of that stuff. So those have to be free and clear before you can execute that transaction. So if you only have your first mortgage and you're in a situation where you're become behind on your mortgage, and you want to explore that option, you should ask the servicers that if that's an option that you can consider. Not all investors, the people who own the notes, allow that option, but the GSEs do offer that, and as we know, the GSEs, Fannie Mae and Freddie Mac, have the majority of the performing loans outstanding, about 60% in the market, and about 15% or so combined of the defaulted notes.
The unemployment rate's really high right now. What can the servicer do on behalf of the homeowner if he or she loses her job?
There are forbearance plans that the homeowner can take advantage of.
Please.
Exactly. So the forbearance option is something that I find folks tend not to ask about, and they should ask about it if they're unemployed.
They should ask the servicer,
They
use
should
that terminology,
ask
forbearance.
Forbearance. And a forbearance plan is a break. It's a cessation of payments or a significant reduction in your payments.
Servicers will do that.
They will do that on Fannie Mae and Freddie Mac loans.
Okay.
So it's investor dependent. And what that does, it allows you time to look for a new job. You're probably collecting unemployment insurance or unemployment income at that time. And they're going to want to make sure that we don't develop bad habits as homeowners by paying nothing unless it's completely infeasible for you to pay anything. During that plan, you are working and checking in with your servicer on your progress towards being able to move into another type of restructuring.
How frequently do they need to check in with their servicer? Every month?
Every 90 days.
Every 90 days.
Every 90 days. Now, the servicers will have their own rules, but generally it's every 90 days. And they usually grant forbearance plans for 3 to 6 months at a time. And then they go back and they check in and then they extend it. Most of the servicers have the authority under certain circumstances on behalf of Fannie Mae and Freddie Mac to offer that option, and it's something that you should look into if you are unemployed.
Okay. Loan modifications are very popular today. Why in the world do we hear about the servicers continuously losing their paperwork? The homeowner has to always send the same paperwork in over and over. Why does that happen, Ingrid?
Well, it's unfortunate. The servicing industry was really built to pass through payments to the people who own the notes.
Okay.
So the servicers are the agents of the investor. Okay. They are there to make sure that the loan is serviced or paid on properly and collect the payments and protect the insurance and pay the taxes and all of that. And for that, they get a fee, okay?
Right.
In the early 2000s, probably, leading up to this crisis, our delinquency rate nationally was 3% maybe,
if minimal.
That, very minimal. These shops were not organized to take in massive amounts of paper. The Making Them Affordable program has quite a bit of documentation associated with it. And there are very solid reasons for that. The Making Home Affordable program also has to be considered before the proprietary programs that the servicers offer, even Fannie and Freddie's proprietary program. Because you have to start with that, you have to collect the paper in an organization that wasn't necessarily designed to collect paper. Okay. Now that's the beginning, right? You still hear some horror stories here and there, but for the most part, the servicers are really focused on their imaging capability, their document retention capability, and they're also doing a lot in the education space, making sure that folks understand what the documentation looks like so that they don't submit the wrong documentation and then feel as though they're resubmitting the same thing, but it really didn't address the documentation request initially.
So they're not doing it deliberately. No. They're just not set up for it.
They weren't in the beginning. I believe they've made significant progress in those areas.
Okay, say I'm a homeowner and I've started getting the foreclosure letters. They're coming in, I'm starting to panic. Are there any options left for me now that I've been referred to a foreclosure?
Absolutely.
What can I do?
So the